Hi there, welcome to Kneppy Invest and welcome to the stock of the day. SGH used to be called Seven Group Holdings until recently when they changed their name, formed in 2010. I don't really know the history of this company, if it was spun out of Seven West Media or something like that. But SGH actually owns about 40% of Seven West Media, and Seven West Media released their half-year results today, and SGH released their half-year results. So definitely a connection there. And that connection is probably Kerry Stokes. And lo and behold, the managing director and CEO of SGH is Ryan Kerry Stokes, the son of Kerry Stokes. And to be honest with you, they don't look all that much alike. Anyway, so SGH did release the half-year results today. On first glance, I did come away mostly impressed, and results did beat expectations apart from revenue. And if I did have one gripe about these results, it was revenue. I would have liked to see revenue grow a little bit more than it did, but the market's impressed. Share price up 5%. So what I'll do in this video is I'll go through the results fairly quickly, and then we'll have a look at the chart, because the chart for SGH is quite impressive. In fact, the share price is now at an all-time high. So let's have a look at this company's half-year results. And the reason why this company is a stock of the day is mostly because these results are quite solid. Plus, other big companies that released results today were quite disappointing. Hello, CSL. Anyway, so revenue of 5.5 billion, only up 2%. So in fact, when I first saw this particular announcement, I saw the revenue number and I was like, but EBITDA up 8%, EBIT up 10%, Westtrack EBIT up 5%, Boral EBIT up 29%. Seems like that was a very astute acquisition, because they made that acquisition, I think, within the past year. And operating cash flow up 15%. Earnings per share up 4%. And dividend, up 30%. So interim dividend of 30 cents. So there'll be a lot of income investors who might like that. They've also guided for high single-digit EBIT growth in financial year 25. And that guidance was originally issued probably at the AGM, and it's been maintained. So this is not an upgrade nor a downgrade. Now, these results did beat expectations apart from revenue. In fact, revenue was a slight miss. So revenue was a 0.5% miss, but EBIT was 6% ahead of consensus. Adjusted EBITDA, 5.7% ahead of consensus. And interim dividend, a little bit more than what the market was expecting, 10% ahead of consensus. So that's the main reason why the share price of SGH is up, because these results were better than expected. And even though they have maintained their guidance for EBIT, the market is positive about SGH moving forward. Okay, so let's have a look at the chart for this company. Interesting enough, I was just looking at Nine Entertainment Group, because share price is up for some reason today, and I have a feeling it's because of Seven West Media, and SGH owns 40% of Seven West Media. I'm just thinking that's probably the only reason Nine Entertainment Group is up. Anyway, let's have a look at the chart for this company, and a much better chart than Nine Entertainment Group. In fact, this is a mistrade. I'm not sure if I would call SGH a high-quality company, but if you do have a look at the weekly chart, it does have features, features of a high-quality company. So if you just put in the 200-week moving average and just go back 10 or so years, the share price has definite characteristics of a high-quality company. Share price has been in a beautiful uptrend, has moved up from $8 to $51.21 during, since 2016. And where the share price drops below the 200-week moving average is a great time to buy this company. Unfortunately, if you use that sort of strategy to buy any shares in this company, share price or current share price is well above the 200-week moving average. In fact, it's almost not quite 100% above it. We'll say about 60 to 70% above the 200-week moving average. But a beautiful looking chart. Share price moved into a long-term uptrend back in, if you go have a look at the daily chart, back in about 2020, I was going to say late 2022, early 2023, when the share price was around $20. So if you've held this since the share price broke out, you've done fantastically well. Share price has gone from $20 up to $51.22. If we zoom on what's happening right now, share price did reach an all-time high today. We have seen a little bit of selling, so not the greatest one-day candlestick. It's not like one of those green candlesticks when the share price opened at the low of the day and closes at the high of the day. It looks like the share price will be closing near the low of the day. So we have seen a little bit of selling pressure today, and it could be just because maybe of valuation. That's the only thing I'm thinking of right now. Valuation P ratio of this company based or according to TradingView is 39.49 and dividend yield is only 1%. So possibly valuation is keeping a lid on the share price rallying today. But overall, a pretty nice looking chart. Share price at an all-time high and share price remains in an uptrend. All right. So if you have any thoughts, any questions about SGH, I'd love to hear them. So leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial whatever. Anyway, that's it for this video. Have a good day. Bye.